The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Monday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. 24 minutes to go until the opening bell, and we got some market movement this morning. You got a criminal investigation. Criminal. You're not talking about whether it's just doing your job. You're talking about a criminal investigation of the Federal Reserve Chair and the surroundings of that to get over the headline. And why not? You kick it off because, boy, quite the headline. Prosecutors are investigating Fed Chair Jerome Powell. The criminal probe looks at his testimony to Congress over central bank renovations. So the mere allegation that you're talking about now facing criminal charges, and I guess the allegation is that he potentially lied to Congress because he wanted to renovate the building that the Fed is in, that his aspirations to renovate a government building ran afoul. He lied to Congress over that fact. That's the allegation, that he had such an interest in renovating the government building that the Fed is in that somehow it's now a criminal probe. He puts out a great video, Chairman Powell, last night. You should watch that video if you get a chance, refuting those allegations and saying, guess what? It's not about that at all. It's about wielding power and the president and wielding that power onto the Federal Reserve in the interest of lower interest rates to spur more economic growth. And already Republican senators, one of them Tom Tillis out there, saying he's not going to support anyone that the president nominates until this is over. But it's unfortunate, and you're seeing markets react today. And the real unfortunate part is I believe that the president wants lower mortgage rates. Okay, he wants lower mortgage rates. I mean, Bill Pulte was out there on Bloomberg this morning. Okay, here's the Pulte Group, his family company that he gets his generational wealth from. It's a $25.7 billion home builder. He was on the board for 4 years of this company. He was on the plane with the president on Friday night as they went to Mar-a-Lago. He's a member there. And he's seen as the instigating leader. And then you have Janine Pirro, who is the one who actually signed off on this, who's the U.S. attorney. And the unfortunate part is that you can influence the 2-year, but if the market thinks, okay, that the Fed is not going to have the ability to ever act accordingly and is constantly going to be under pressure, then over a 10-year basis, there is a radical risk for inflation that will not be tamed by a Fed that has to make difficult decisions. That's the independence. So the worry is not right now, okay? In the short term, everybody loves low interest rates, okay? You're seeing it play out with the credit cards today as well. Here's Capital One. You're down by $21 on the open, okay? What's the Affirm symbol? Is that it? Yeah, it is. And then you have Affirm higher. So, greatness, folks, is not the credit card stocks going down 10% and the buy now, pay later stocks going up 5%. People need credit. Nobody's going to be opening credit accounts for people who are at high risk and somehow they're only going to yield 10% on a credit card balance. Nobody's going to have any credit card balance. Okay, in the short term, things are great with the headlines, but when they actually play out to the fundamentals, okay, because the problem when you go out to a 10-year or a 30-year, if you think you have a Federal Reserve, this isn't just about losing your job, okay? This isn't just about getting replaced. You now have to risk being locked up in jail if you're the Federal Reserve under this president. It's a substantial threat that has been levied for obvious reasons. And, the mere notion that somehow that Powell is so invested in glorifying this government building the Federal Reserve is in, that somehow, okay, that he's going to risk lying to Congress to hide all the affinity that he has for glorifying the Federal Reserve building, that he's going to be lying to Congress. Folks, they broke ground on this building in 2022. Okay, the plans were prior to that. What do you think the pro forma looked like for a build out of this size in 2020 and 2021? They broke ground in 2022. Any idea of what's happened to building costs since 2021, 22, 23, 24? Okay, you're talking about 100% sometimes, period. That's it. So the notion that he's risking criminal charges and the motivation for that is not personal gain, right? The motivation is simply he wanted to renovate that building so much and put so much decorative marble in there that he was out there lying to Congress left and right to try and hide what he was doing. It's a laughable notion. Laughable isn't a word, right? Farcical notion. We'll go with that. It is. And the bummer of it is, okay, is that that's going to lead to higher interest rates, not lower interest rates. And it's quite an assault on the Federal Reserve. We're going to get a new name out there. And Trump's claiming he has no idea and he'd be shocked. But meanwhile, he's on that plane with Pulte. He's leading the charge. He has been leading the charge on the independence of the Fed. And good for the chairman standing up for the independence of that Fed, because the last thing we want, folks, okay, it's like we forget the reason why these institutions even exist. Like politics, you know, you can disagree with him, but you're not talking about that he's facing criminal charges. He's now facing getting locked up in a jail cell because Trump disagrees with him on interest rate policies. Now, you can disagree with him. This is an exceptional time, okay? The whole debate over where interest rates should be is great, all right? Because you want to make the case that we should run it hot, let's run it hot. What's the risk we run it hot? You get a little bit of inflation that pops up. What's the counter argument? The counter argument is you have the ability to rein that inflation back in. Worst case scenario, you get a little bit of inflation. You know what that does? It inflates away our future debt. We have to grow ourselves nominally, though. We should be growing ourselves nominally, okay, out of this deficit and debt that we have. And so, yeah, maybe you run it a little bit hot. But the whole notion that now he's facing a criminal probe and he's facing criminal charges, and the notion that somehow, okay, that his motivation is so grand for that building that that's where criminal charges, okay, this isn't doing your job. This is criminal charges that are going to be overhanging, and that's quite an assault. And that is not going to lead to the market having faith and confidence over a 10-year period, okay, that inflation won't be a problem. And that's what you need. You need central bank independence, okay, and don't forget how the world works. Don't think that somehow you have the ability to be bigger than the pure economics at play in that bond market, because you look at those numbers and it's not like it doesn't matter, folks, okay? Pretty remarkable. You're talking about cost overruns over a building that broke ground in 2022. It's not set to be done in 2027, maybe some of the most rapid inflation of our time. And guess what, folks? Okay? That scares markets, and you better believe it. And we got the gold contract. All-time highs. We pull back a bit. And we're going to get a new Fed chair at some point nominated. We'll see if they get through now. Tom Tillis, Republican, pushing back. Markets in the red. We're coming back talking equities, folks.
For potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. You take a look at the gold contract. So gold, record highs. As, a little bit of a flight to safety. Gold right now up $107. We take a look at the dollar. That's dollar weakness for you, folks. Okay? You don't want to be in the dollar. It's the same way it works in any other country. You see these headlines in other countries, you say, whoa, what's going on with that country? Okay, that decreases my confidence in that currency. When you got Banana Republic level, criminalities now that the central banker's not cutting rates fast enough, okay? And you see the dollar decline from 99.20 to 98.70. Gold, silver, catch a bid. You got gold up $106, and we were up $130 to 46.30. You just dropped in the last few minutes. You jump over to silver, up to 85.75. We were at $73 on Thursday. We just hit 85, 84.41. Silver up by 6.4%. You jump over to platinum right now, up 2.5% right now. Platinum, not quite over the highs. We jump over to copper, not quite as well. We back off a bit. You jump back to that dollar right now, down by 340 ticks. And we jump to yields with the 10-year right now. There's your volatility on the Sunday night, but the 10-year right now sitting at 4.19. One of the other things that's remarkable, so of course the assault on the Federal Reserve officials, now it's on the chairman himself, okay? And you're not just talking about due diligence, not talking about getting removed for not doing your job. This is a criminal investigation, man. You're facing criminal charges, locked in a box, okay? And this article is back from September of last year, folks, just so everything gets kept in check.
all of the talk of Lisa Cook and her mortgages, etc., okay? Whether that is in relation to them doing their job or not, you got to be squeaky clean. I get it, okay? But 3 administration officials have multiple primary residence mortgages. Labor secretary, 2 primary residence mortgages in quick succession. One of them at a country club in Arizona where she vacations. Secretary Sean Duffy, he's got primary residence mortgages in Jersey and D.C. The EPA administrator, 1 primary residence in Long Island, another in D.C. Now, it makes sense. You can move around at different areas, okay? But nonetheless, this is just, now you're talking about, to risk getting locked in a box, which is what criminal charges can entail, okay? That's what jail is. They lock you in a box. To risk, Trump is the one that put him into this position, man. And you can make the case that you disagree, folks. All right? It's a great case. Nobody knows where rates should be right now. All right? We have all of these contributing factors, whether you're talking about tariffs, right? You're talking about imports, exports, the influence they have on the GDP numbers right now. We had a government shutdown, which skewed some of the data and made it more difficult to forecast where we should go. You have an unemployment rate that's 4.4% right now. An unemployment rate is 4.4% right now, okay? And inflation is not back to 2% when you incorporate everything the Fed looks at. So, yeah, to talk about criminality, 4.4% is the unemployment rate right now. All right, we jump around to some other equities. News hitting the tape as I was coming on the air. Paramount Skydance, not a surprising development that they're going to be suing for information about the Warner Brothers and Netflix takeover. But Paramount Skydance, the news hitting there, that, yeah, they're going, and this is going to play out for years. Warner Brothers up to 29.04 on Friday. You back off a bit with the market today. But, yeah, Paramount suing for information. Looks like Discovery. Not Warner Brothers Discovery, just a little of the first stage of Discovery, right? Suing for information about how that took place. They're going to allege they weren't given a fair deal. Netflix shares, you're trading at 89.46. This has turned into a problem. Now, the one thing I'll tell you is that this is a nice area on Netflix. You're right back to the April lows. This is a 382 pullback. The problem here is that you got selling, man. You got selling every single, not right, but December 1st, the week of December 8th, the week of the 15th, some strong volume on the way down. You get 2 holiday weeks. And then we had selling last week with some pickup as well on Netflix. You're off from 135. You're off $45, more than a 30% pullback from where we were in July. And the market's saying, hey, this is great. But we didn't imagine spending $100 billion to acquire a company when we were trading at 134. Well, guess what? Paramount Skydance changed that. And Netflix said, no, if somebody's going to get him, we're going to be in the running. Look at that pullback, man. Paramount. Now, what I will say is the last week's pullback, lighter volume than every week at the beginning of December. December 1st, 8th, 15th, same thing. Last week, you trade lower and you do it with volume. Lighter than those 3 weeks. Nonetheless, all those companies right now, Paramount, Netflix, you get into a bidding war, everyone loses, right? As in, no matter who's going to pay, it's a lot of money, man. But I do like right where we're pulling back to right now. The only thing that sticks out is that volume that we had in those first 3 weeks. But you are back to this. Okay, look at what we're back to. This volume you had in the beginning of the year, the April lows. It's also the 382 pullback. You got to get pullbacks eventually, folks. Okay, Netflix traded from $16 to $134. I know it's a heck of a pullback, but you just traded from 16 to 134, right? Let's jump around to some of the other leaders this morning. You got NVIDIA shares down about 1% on the open. We're off $1.80 to 183 from 184.86. Walmart's trading higher. Check it out. They're going into the S&P something, I think. What are they going into? Yeah, that's a big one too. Walmart's in Google Gemini, but I think they're going into the S&P. Did I see that correctly? Yeah. Walmart to join the NASDAQ 100, beginning January 20th, replacing AstraZeneca. Now, the other thing in there, Google Gemini shopping integration with ChatGPT, I think. So Walmart's just been on fire, man. Look at this equity. You're going to open at all-time highs again for Walmart. Market's getting clobbered. Walmart's pushing all-time highs right now. You know, these 382 pullbacks sometimes, folks, in a bull market, that's what Walmart did in that April pullback. Now watch this. From the low of the lows of late 2023, zoom in here, pull this down a little bit for some clarity. guys. Check it out. Look how you're breaking above this area, right? You get the A to B move, late 2023 to the beginning of 2025. You pull back, a nice 382 pullback to 80. You come up to that area, and you bump up against that area, which the high was at about 100 and change, right? You bump up, you get the sign of strength, and then you get it one more. And that was the move. The earnings November 17th, but that move takes you all the way up to 135 on Walmart. I think that's where we're going. You're getting the extension today. We're going to be at 117 for Walmart. We jump over to Target shares. Quite an acceleration from the lows of November. Target, you're going to be flat this morning as well. Jump over to Amazon shares. Quite a week last week for Amazon. Look at that extension. This we're down with the market right now for Amazon. Jump over to Meta. Little volatility for Meta, down a few dollars right now. You jump over to Google shares, down a few bucks as well. You jump to Tesla, trend down $4. All right, it's going to be an interesting Monday in the markets, folks. We got the S&Ps off by about 0.6%. We got yield slightly in the green, the dollar trading lower, gold and silver at all-time highs. We're coming back for the opening bell, folks.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We get the S&Ps right now, negative by 32 points. We were as low as about 69.50 in the overnight session at about 4 a.m. Eastern time. We're negative by 0.4% right now in the S&Ps. You jump over the NASDAQ 100. negative by 0.6%. A little bit of a bid on the open. Going to be an interesting day, and it's going to take some time even for Powell. You know, I would find it hard to believe, and maybe it's just misplaced hope, but man, I remain hopeful. But I would find it hard to believe that Chairman Powell is going to get a criminal conviction because of cost overruns of a renovation of a Federal Reserve building that hasn't been renovated in decades, if not centennials. Okay? So, you know, Tom Tillis is out there, and now Trump's going to have to get his next Fed chair through Congress, and you're seeing some Republicans, rightfully so, push back because it's all about interest rates. And man, you know, if you can get locked up in jail, folks, for not dropping interest rates when the unemployment rate's at 4.4%, right? This is the headline, okay? The unemployment rate is 4.4% right now. Chairman Powell's under criminal probe, risking jail time because he won't lower rates when the unemployment rate is at 4.4%. If you can't translate how that may play out to people who want to loan the government money and what type of interest rate they might want to wait 10 years to get paid back, then you should look into the probability that we'd have inflation and what happens then. Can you imagine right now if we have runaway inflation that maybe the economy is not as weak as they imagine, okay, and maybe tariff costs are pushed backwards, right, and some of those costs are going to get pushed onto the consumer, and there's going to be kind of a tailwind to some of those. You're seeing it in yields today. You got lower price, you got higher yield right now. The 10-year is off by 5 ticks right now. We jump over the 2-year, and we're basically unchanged. You were a little bit higher, but we're right where we were within 1 tick at 104.07. You got a 10-year flirting with 4.19. And the dollar right now off about 30 pennies. And yeah, they're loving gold on a day like today, man. I mean, wouldn't you if you lived in a country that the central bank was under assault and the Federal Reserve chair was potentially going to get locked up in a box because they won't cut interest rates? You know, that's what's going on. Okay, this is not about that somehow he's a criminal because he renovated the Federal Reserve building and there were overruns. Not what's happening. All right, jump back to Walmart shares on the open. They give back some of those gains up by 2.1%. You jump over to Target, negative 1.1% right now for Target. We jump over the big dogs. NVIDIA catches a bid on the open. They're barely in the red. Apple, negative 0.2% right now. Microsoft, slightly in the red. All right, growth stocks catching a little bit of a bid. Amazon back into the green after a strong week for them yesterday. Jump over to the streamers, Paramount, Netflix, and FLX. Well, there you go. All right. Netflix, yeah, growth stocks getting a little bit of acceleration. Tesla down about 0.5%. And so we're going to see how it shakes out because the next Fed chair does have to go through Congress. And you got Tom Tillis out there vowing to oppose any Trump nominee to the Fed until the matter of the Department of Justice grand jury investigation is resolved. And good for Powell. Instead of just coming out and saying I'm innocent and all this stuff, he basically just come out and said, you know, what do I always say? Context is important, okay? If you look at this and you don't take the context of what's going on, yeah, you could say, well, let justice play out. Well, context is important. And even Powell now said, this action should be seen in the broader context of the administration's threats and ongoing pressure. All right. So you go from there to credit cards. Now, you want to talk about Banana Republic nonsense, okay? Hey, why not? Okay, let's make sure that people who have so much debt that they have to pay credit card interest rates that are 23, 24, 25, 27, 32% a year, okay? But the only way to do that for them to exist is for the government to subsidize that. Because what the president says is that starting January 20th, credit card companies are only going to be able to charge a 10% interest rate for a year. Well, how excited do you think they're going to be for what happens a year from now? Okay, 10% for an unsecured credit line from many people, especially the people who need access to credit cards, is a disaster for banks. It's not going to happen. Okay? And the quickest way to realize this is that if you could make money by offering credit cards with unsecured debt at 10% right now in this environment, people would be doing it. Okay? You can't do that. The risk is too high. So what's going to happen is people who need access to that credit, it's going to dry up. Banks aren't going to offer that. That's Capital One, down by 6.3% right now. JP Morgan, off 1.8% right now. Morgan Stanley, down 0.5%. Goldman, off about 0.4%. Bank of America, off by 1.3%. Citi's off 2.7%. Wells Fargo's off 1.7%. You jump over to a firm, they give back all the gains, actually. Okay, they were higher. The buy now, pay later, down 0.1%, but all the way up to 86. You know, there's a difference in the way that you have some of those payday lenders, right, preying on people and charging interest rates that are 200, 300, 400, 500. You can never get out of them, okay? But when you're talking about credit card rates that are 25, 27%, they're not going to exist at 10%, folks. All right, now let's take a look at this thing. It's been a heck of a run for Capital One from April lows of 142 to 260. You had some selling at those November lows with the market with some volume there. Not the most encouraging of volume on this equity. You know, I was looking at Pulte Homes, PHM. Okay, Bill Pulte. You know, pretty remarkable. This is being led by a man who has generational wealth as a home builder. Okay, of course, Mr. Pulte wants mortgage rates to be as low as humanly possible. Okay, he's in the home selling business. That's his entire key to success is mortgage rates. You look at the volume on this one, okay, and yeah, you're flat today, but you got quite an extension on Friday. But you look at the volume on this one, and you got some selling. It does not line up as well as some of the volume. I'll pull them up. We'll take a look at the home builders. But this is Pulte. And you got some selling in October. You got selling on their earnings. And then what happens is you trade lower the week of December 15th on huge volume. We get 2 holiday weeks, and then you bounce on lighter volume. You got above that area on lighter volume on Pulte. So if you're looking for the strongest, okay, I keep bringing it back to Lennar. I love this acceleration you got November 17th. You got some follow through. That's Thanksgiving week that you got that follow through, and then you back down on lighter volume. You get holiday volume that brings it back, and then we have a nice sign of strength. Now, not above where we were on that week. You need more volume to come into these. Lennar down by 0.5% right now. DR Horton, not quite as strong too. If you look at the home builders, I like Lennar the most. You got quite an extension last week. Today we're at 118. Market's clawing it back. S&P's off by 16. We're coming back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. TFNN.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We get the S&Ps pushing higher on the open. We'll go to a 5-minute chart. And yeah, quite the acceleration. We're up to 69.92, inching towards 7,000. Growth stocks as well. Negative by just 70 points right now, 25,870. We take a look at the Dow, 49,500. We take a look at some of the volume in the indices. How about that Dow, man? Record territory last Wednesday, 49,876. That's your daily. Take a look at the weekly. That was some strong volume last week. Accelerate up January 5th. Take a look at the volume on the S&Ps. Now you're right at the 1-to-1 A to B, C to D in that October to beginning of 25 acceleration. You back down to the April lows and you do it all over again. On the S&Ps, we had some volume, man, on that November pullback. Okay, you accelerate to the November 17th low. You do it on 11.6 million contracts on a weekly basis. And there hasn't been a week really since then. You get that holiday week. And then last week, you only did 6 million. 6 million. That's nothing. Okay, we were doing, what? 7 million, 9 million, 6.8, 7, 8 million, 8 million, and 11 million. And this week of green here, December 15th, you did get some buying there, but that had a lot to do with the selling, actually. As in the week of the 15th, you go 3 days down, okay? December 15th, 16th, and 17th was selling. You get a bounce at 6,800. And then look at the price extension you got on December 19th with almost no volume. Okay, so a lot of the volume of December 15th was to the downside. You catch a bounce. Now we go back to the weekly. I was looking at this last night. Because look at this bar on December 15th. You say to yourself, well, that's a flat bar, right? We pretty much went lower, closed where we were. But what happened was a lot of that volume, okay, and that's one of the only bars that sticks out to the upside. You have this bar here from October 13th. And then you have December 15th. You have some volume. Okay, now you barely closed above where you opened for the week, but that was a lot of selling volume as well. So if you turn that bar there into kind of a selling week, which a lot of the volume was on the downside, versus you got a lot of a price acceleration with no volume on the Friday, December 19th. If you're watching this one, okay, when I looked at this last night, I said, oh man, look at this. So that's a selling week. This is a selling week. You had all this selling from late October to November. Where's the buying volume? It's not here in this market right now, okay? So we're catching a bounce today. We'll see how the volume comes in today. Let's take a look at the daily so far. You've done about 327,000 contracts, but guess what? We're 15 minutes into the day, right? See where we go from there. Check out some of the defense stocks after their seesaw move last week. Northrop Grumman up about 2.1% right now. Boeing up 0.7% right now, but a heck of a run for them from November. Let's take a look at the heat map. We'll kick it off with the S&P 500. These memory stocks, man. Look at Broadcom up by 1.5%, AMD, AMAT up by 2%, Lam up by 1%, Palantir up by 1.8%. Maybe they fall into those defense stocks right now. See, Intel giving back some of last week's gains. Yeah, not good to be Visa this morning or MasterCard. Visa down 2.7, MasterCard off 2.5. There's Capital One off 6.2, American Express off 4%. The banks as well. JP Morgan off more than a percentage. Talked about Bank of America. And then you talk about those defense stocks. Raytheon up by 1.5. Healthcare stocks lower as well, as it looks like President Trump looking to even veto some of those subsidies if they do make it through Congress and the Republicans. UNH off 1.8%, Intuitive Surgical off 1.4%, Cigna off 2.5%. All right, let's jump back to gold. Quite a day of volume already. You've already done 170,000 contracts on gold. Look at this. It's going to be a huge day, man. Gold's up $108 on a weekly basis. Okay? You're not getting the type of volume. You want to see another expansion, something like this. These bars are not last week. It was just what we were doing towards the end of December, but that was nothing compared to the volume we were doing basically from late September into the October highs. You haven't had a real acceleration as we're putting 4,600. Silver's a different story. Silver has had some real accelerations, and you're going to do it probably again this week. So silver accelerates higher, and we'll just call it matching volume. Okay, a little bit lighter than the prior week. That was an exceptional pullback the week of when you go to the daily on silver, right? This pullback from that Monday the 29th with all that volume of 248,000. What silver's doing, that would be wild. So here's the kicker, man. If you could ever do 248,000 for silver today, whew, I don't even know if you can do that today, though. That was an exceptional day. You've already done 91,000 contracts today. And you did 653, but silver's got volume on this run up recently versus gold's volume is all at this highs in October. But silver remaining strong on your weekly basis. Now, if you're trading silver, okay, and you plan on just holding it, that's great. Hold it. Hold it for your kids. You know, if that's your plan, right? Hold it for yourself for whatever it is. Maybe it's retirement. Maybe it's just a hedge against the dollar, okay? If you're doing that, you should just be aware that a 382 pullback on silver can easily bring you back to $62. These are the types of moves you want to look at, because even in a bull market, man, you're only talking about a run from April to where we are right now, and pulling back a 382 pullback for this run, you're talking about almost $62, and that brings you back to kind of some of the volume you had in December. Let alone a 50% would bring you back just to the highs of the October and November highs of $53. Because, man, New Year's Eve we were trading at $68. And here we are 12 days later, and we're up almost 20% from that number at $85 on silver. You jump to gold. Now, even on this recent run that we've had on gold, 382 brings you back to 4,100. And originally, the 382 on the run to the October highs brought you right back to that 4,000 acceleration. And realistically, how about that, right? 1-to-1 brings you to 5,000. Hey, on a day like today, man, we've already done almost 200,000 contracts. This is how you want to break highs, man. You do it with volume. Gold looking especially strong right now. Jump around to some of the miners. Look at Agnico Eagle up by 4% right now. You jump over the silver stocks. Hecla up by 7% right now. First Majestic up by 7. All right, we might be green by the time I end it. S&P's negative by 8, 69.96. One more segment. We'll come right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&Ps negative by just 6 right now. We got ExxonMobil down by 1%. So audio of President Trump out there saying that Exxon's getting too cute or something like that. And for that, what they said was that Venezuela's not investable right now. And when their CEO was asked when they pulled out, they stated that they pulled out during Trump's last term because of these sanctions that he put on Venezuela. And so, yeah, Venezuela, Exxon, nonetheless, he may be on Exxon, maybe on the outskirts for just talking about the risk. You're going to see it next with the banks when they say we can't issue credit cards to folks at 10% because we'll just lose a bunch of money. That's not something we can invest in. That's how market forces work. And if you say that right now to the president, you're on the outskirts. That's what's happening. Now, UNH. Now, UNH is lower this morning. Okay, down by 1.5%. So this is a 50,000 pages of records. Okay, a new report. Launched an investigation last year. It accuses them of no wrongdoing. It never goes hard enough on these healthcare stocks, folks. Some of the stuff they talk about here, if you've read the prior articles, man, I've done prior shows practically on this. In some cases, guidelines called for UNH employees to diagnose payment-triggering conditions without confirming them through recommended testing. For instance, employees were trained where they would just diagnose someone with atrial fibrillation if you were on a certain medication, without checking whether they were prescribed for the actual condition. Usually that disorder would be diagnosed through an electrocardiogram. Nope, they just diagnosed them. Yep, for chronic COPD, that a standard lung function test should be used, but the providers were also instructed to record it in the absence of a test. Yeah, you can just say they have it. You don't need a test. Who ends up paying for that? You want to talk about real fraud, man? Okay, they should be going after UNH, not Powell. UNH off 1.5. S&P is off by 5. Look at this run, 7,000. Folks, stay tuned. Basil Chapman, he's coming up next. I'll see you live at 3 o'clock for the Tom O'Brien Show. Basil's up next, folks. Have a great Monday, everybody.